So Senator Kennedy from Louisiana is recognized.
Thank you, Mr. Chairman. Mr. Gruenberg, what the hell's going on at the FDIC? How long have you been at the FDIC? You ever sexually harassed an employee?
Welcome to Liberty. Watchtower your front row seat to the pulse of American politics. Here, we cut through the noise to bring you sharp, timely updates, in-depth analysis, and bold commentary on the issues shaping the nation. Whether it's breaking news from Capitol Hill or grassroots movements making waves across the country, Liberty Watchtower keeps you informed, engaged, and ready to think critically. Subscribe and stay tuned. Freedom starts with awareness. On Capitol Hill, tensions ran high during a Senate Banking Committee hearing as lawmakers confronted senior financial regulators over two urgent and highly consequential topics: a scandal of sexual misconduct and workplace abuse at one of the nation's top banking agencies, and the potential economic impact of proposed regulatory reforms to the U.S. banking system under the Basel III Endgame framework. Senator John Kennedy of Louisiana, known for his direct and often fiery style, led a blistering line of questioning directed at Martin Gruenberg, the long-serving chairman of the Federal Deposit Insurance Corporation, FDIC.
What the hell's going on at the FDIC?
It's a troubling question, Senator. I read the report as you did. As I indicated earlier, it is deeply disturbing and troubling, and we're going to bring all the resources of the FDIC to bear to understand what is going on, what has occurred, and how we can most effectively address it.
How long have you been at the FDIC?
I joined the board as a member in August of 2005.
Okay. Almost 20 years then, huh?
Yes, sir.
Have you ever sexually harassed an employee at the FDIC?
No, sir.
Apparently, you're the only one. I just find this incredible. A former female employee recalled her male colleagues saying women needed to use sex to get ahead at the FDIC as they stared at her. Did you read that?
I did, Senator.
Quote, according to one young woman, it was just an accepted part of the culture. One of the female examiners received a photo of a colleague's penis. During lunch with an examiner, another young female employee who had become friendly with this person she was having lunch with, the guy she was having lunch with complained to her about his marriage, telling her he wasn't having enough sex. And then he said to the young woman, obviously, if I walked into this office and you were naked, I'd F you right here. Did you read that?
I did, Senator.
Did you read the 2020 Inspector General's report when it said that the people at the FDIC were acting like they were in Animal House or Porky's Revenge? Did you read that report?
I read the Inspector General report, Senator.
And what'd you do about it?
Well, I was not chairman at that time. There were 15 recommendations, if I may say, 15 recommendations in that report, and I believe the agency addressed all 15 of those.
What did you do about it personally? What was your position at the FDIC?
I was a member of the board at the time, but I was
what
not.
did you do about it personally?
At that time, I didn't have the responsibility of the
You didn't
chairman.
do anything, did you?
Not at that time, Senator. No.
Okay.
Gruenberg faced mounting scrutiny following the release of a deeply disturbing investigative report that exposed a toxic workplace culture at the FDIC, one rife with allegations of sexual harassment, misogyny, and abuse of power. The report, which included explicit and alarming anecdotes, such as employees receiving unsolicited sexually explicit messages and being subjected to degrading comments, called into question the accountability and leadership structure within the agency. Despite having served on the FDIC board for nearly 2 decades, Gruenberg distanced himself from direct responsibility. citing his role at the time of the earlier Inspector General reports as that of a board member, not chairman. But Senator Kennedy rejected this explanation, accusing Gruenberg and his fellow board members of negligence, moral failure, and a dereliction of fiduciary duty, especially in light of the 2020 Inspector General report, which had already raised red flags about the agency's culture and practices. The senator's remarks were pointed and emotional, branding the environment at the FDIC as one unfit for public service, stating, "This is no country for creepy old men." Shifting from ethical concerns to economic ones, the hearing also tackled the controversial Basel III Endgame banking reforms, new regulatory rules proposed to bolster the financial resilience of large banks by increasing their capital requirements. These changes are intended to prevent future bank failures and systemic crises like those witnessed in early 2023 with the collapse of several high-profile banks, including Silicon Valley Bank. To explain and defend the proposal, Michael Barr, the Federal Reserve's vice chair for supervision, responded to Senator Kennedy's concerns that the regulations could raise the cost of credit and drive borrowers away from traditional banks toward non-bank lenders, which are often outside the scope of strict regulatory oversight. Barr emphasized that the impact on credit prices would be modest and argued that these rules would strengthen the financial system's stability, noting that they directly address vulnerabilities, particularly interest rate risk, that contributed to recent bank failures. The hearing underscored a growing political and institutional clash over how best to ensure financial safety, public accountability, and ethical governance in the U.S. financial system. It laid bare not only the structural issues within regulatory agencies like the FDIC, but also the complex trade-offs involved in reforming bank regulation without unintentionally fueling instability in the broader credit market.
Did any of your other fellow board members do anything?
As a general matter, that falls to the chairman who's responsible for the day-to-day
It was
management.
somebody else's problem, not yours.
No, well, I was a member of the board to the extent that we were consulted, but in this matter, it's really a management.
You didn't think you had a fiduciary obligation to those young women and to the organization and to the banks that put up the money?
Well, certainly as a board, we had that obligation, but it really falls to the chairman to take the lead on this.
Somebody else's fault.
Well, there was a
I mean,
chairman.
that's what you're saying, isn't it, Mr. Chairman?
No, I think the board,
Sounds to me like it.
well, not, Senator, if I may say it, board certainly has an oversight responsibility, but in the day-to-day management of the agency, which matters like this would fall to, I think it's reasonable to expect the chairman to take the lead.
Well, when the banks last spring screwed up out in California, you blamed it on their board, didn't you?
I think the report that was done on the failure found that the root cause of the issue was the management of the institution.
Right.
They also found accountability for the supervisors.
The board was blameless, is that right? Is that what you're saying?
No, I think the
Kind
agency,
of like the board at the FDIC, it's blameless?
if I may say, Senator, I think the report found, and I think I would indicate that we shared a responsibility as a supervisor.
You and your colleagues ought to hide your head in a bag. This is no country for creepy old men. And they got no place at the FDIC. And this wasn't a news flash for you. You had a 2020 report and you sat on the board. And you didn't do anything. And your colleagues didn't do anything. Mr. Barr, let me ask you about Basel III Endgame. I know you know this, about half of our credit now in America comes from non-banks. Isn't your increase in capital requirements just going to make credit more expensive for banks and push people in the non-regulated, non-bank financial system?
Senator, the capital increases mostly affect trading activity of banks and other non-lending activities of banks. With respect to credit, we expect the proposal to have only a very modest effect on the price of credit. For example, if all of the operational credit risk,
You would
and
stake your reputation on that?
I believe that the analysis is correct in the proposal to the rule.
Okay, if
but
I
we
could
are-
ask one more question, Mr. Chairman, if that's okay.
But we're very open to comment on the proposal. So if people have other analysis
Sure.
that would help us make a better judgment about that, we're very open to it.
The banks out west and elsewhere that went broke last spring, would this change have prevented that?
The banks that suffered losses primarily because of interest rate risk.
It
And
wouldn't
this
have prevented-
proposal, sorry, if
I'm
I
gonna
may,
get
sir.
to-
Senator Kennedy, last question. This is it.
If you could just answer my question.
I'm
My
trying to,
friend-
sir. Yes, it would directly address that because for large banks, their interest rate risk would be brought into the capital roll. Their unrealized losses and gains would be reflected in capital. So it does directly address the kind of risk that we saw.
Senator Menendez is recognized.